Check this out. Bitcoin just tested $89,000, and the entire market is holding its breath. Here's the thing. We've got liquidations piling up, whales moving coins, and the data is telling a completely different story than the headlines. Now let's break down what's actually happening with BTC right now. Bitcoin is trading around $90,700, up about 1.2% in the last 24 hours, but still down nearly 5% over the past week. The key level everyone's watching is $89,700. That's the middle Bollinger Band acting as immediate resistance. Look at this. BTC briefly tested $90,400 as the daily high before pulling back below $89,500. Support is sitting at $88,300, the lower Bollinger Band. And if that breaks, we could see $87,300 tested next. On the upside, if we close above $89,700, the next target is $91,500, where the 30-day EMA is waiting. The RSI is hovering around 33, which technically signals oversold conditions and possible bounce territory. MACD is showing bearish momentum, with the histogram still in negative territory signaling downward pressure continues. Here's what's critical. BTC needs to reclaim $90,000 with volume to confirm any bullish reversal. The 200-day moving average is still providing long-term support, keeping the macro trend intact despite this chop. Whale accumulation is happening below $90,000. On-chain data shows smart money adding over 34,000 BTC in recent days. Now look, price is consolidating in a rectangle formation between $88,400 and $96,900. A decisive break in either direction will set the next major move, so watch those boundaries closely. Now let's talk liquidations. Because over $101 million in BTC futures got wiped out in the last 24 hours. Long positions took the majority of the hit, showing over-leveraged bulls got caught in the dip. Funding rates are near neutral, which means there's no extreme positioning on either side right now. This is actually healthy. It clears out weak hands and resets the market for the next leg. Exchange whale ratio hit a 10-month high, meaning big players are actively using exchanges again. Here's the thing about whales. They're not panicking, they're repositioning strategically. Exchange reserves dropped by nearly 4,000 BTC last week. Coins are flowing off exchanges into cold storage. Over 19,700 BTC moved off exchanges in a single 4-hour window recently. The second largest outflow spike in 6 months. Only 1.18 million BTC remains on exchanges, creating a supply squeeze that supports upward price action. Whales holding 10 to 10,000 BTC accumulated over 56,000 coins since mid-December. That's massive conviction. Meanwhile, retail is selling classic divergence that historically signals a local bottom forming. Smart money is buying what weak hands are dumping. This pattern preceded major rallies in 2017 and 2021. Now let's talk ETF flows, because this is where institutions show their hand. Spot Bitcoin ETFs saw over $1.6 billion in outflows over 4 days, a rapid reversal after strong inflows earlier. BlackRock's IBIT had been leading inflows with $287 million on one day, but then saw $129 million in outflows later. Fidelity's FBTC also experienced heavy redemptions, about $247 million flowing out during the sell-off. Here's the context. Early January saw $697 million in single-day inflows, the largest since October. This volatility in flows reflects portfolio rebalancing, not necessarily a loss of institutional conviction. Total net assets in U.S. spot Bitcoin ETFs are still 24% below their Q4 2025 peak. Room for recovery remains. ETFs have purchased over 710,000 BTC since launch, outpacing new network supply and creating structural demand. Now, mining data. Mining difficulty is sitting at 146.47 trillion. And the next adjustment on January 23rd could decrease it by about 5%. Hashrate profitability fell to around 39.53 per petahash per day, close to break-even for many miners. This is squeezing inefficient miners offline, but the network remains secure and decentralized. Miner reserves are declining, showing miners are holding rather than dumping into this price action. On-chain metrics are painting an interesting picture. MVRV ratio is around 1.56, down from 1.63 recently. SOPR is hovering near 1.03, indicating modest profit-taking but not panic selling. Exchange supply ratio continues dropping, meaning long-term holders are accumulating despite the price dip. Active addresses and transaction volume are down, but this is typical during consolidation phases. 74% of circulating BTC hasn't moved in over 2 years. Record illiquidity creating scarcity dynamics. Now the macro picture, the Fed's policy stance and dollar strength are key drivers right now. Risk-on sentiment is improving, but macroeconomic uncertainty keeps volatility elevated. Gold and silver are hitting new highs, while Bitcoin consolidates, suggesting a catch-up move could be coming. Global liquidity conditions are stabilizing, which historically supports Bitcoin's next leg higher. Michael Saylor's strategy just bought another 22 to 305 BTC for $213 billion, bringing total holdings to 709,715 coins. That's over 3% of Bitcoin's total supply. And Saylor hinted more purchases are coming this week. Strategy's average purchase price is around $75,979, showing long-term conviction over short-term price sensitivity. Institutional players are hedging with options near $100,000, preparing for upward volatility, not downside. Here's the outlook. Bitcoin is in a critical consolidation zone between fear and opportunity. The technical setup favors a bounce from oversold RSI, but we need volume confirmation above $90,000. On-chain data shows smart money accumulating, while retail capitulates, a classic pre-rally pattern. Short-term targets are $91,500 then $93,000, with downside risk to $87,000 if support fails. The bigger picture remains bullish: supply shock, ETF demand, and institutional accumulation support higher prices. Watch the $89,700 level closely. A clean break above could trigger the next rally phase. If you found this breakdown valuable, smash that like button and subscribe for daily Bitcoin analysis. Drop a comment with your BTC price prediction for next week, and let's see who gets it right. Remember, this is education, not financial advice. Always do your own research before making any moves.